Hey there, crypto enthusiasts. Today, we're diving into the Ethereum weekly forecast, specifically focusing on the calm before a potential bullish breakout. Now, I know you're probably thinking, another sideways ETH trade. But hang tight, because there's more to this story than meets the eye. Let's break it down. First off, Ethereum's been in a bit of a holding pattern, hovering around $1,901. But here's the kicker: steady exchange-traded funds, ETFs, inflows and rising accumulation among large ETH holders suggest that the real action might be brewing beneath the surface. Now, that's a fascinating development, right? It's like the calm before the storm, but in the crypto world, it's the calm before a potential bullish breakout. Now, let's talk institutional demand. So value data shows that US-listed spot ETFs have been on a roll, attracting $195.34 million in inflows through Thursday. If Friday brings positive flow, we're looking at ETH's fifth week of steady inflows. This ain't your average market behavior, folks. It's a sign that institutional investors are gradually returning to the market, which could be a game changer for ETH. Now, let's shift gears and look at the on-chain perspective. CryptoQuant's report reveals a clear divergence between large and small cohorts wallets. The large cohorts, 1K to 10K and 10K to 100K, have been accumulating relentlessly, while the smaller ones, 1K to 10K, have been net distributing. This smart money accumulating ETH dynamic is pretty intriguing, isn't it? It's like the whales are gobbling up the supply that smaller wallets are releasing. Speaking of whales, they've been leading the accumulation charge, adding roughly 1.8 million ETH since mid-2025. Now, that's a significant chunk of change. And it's not just about the whales, the overall picture is that the largest holders are absorbing the supply, which is a positive sign for the market. Now, let's talk technical analysis. Ethereum's price has been trading slightly up this week, hovering around $1,901. It's below the key simple moving averages, SMAs, on the weekly chart, but it broke above a falling parallel channel in mid-July, suggesting that bullish momentum is starting to emerge. If ETH continues its recovery, it could extend towards the 200-week SMA at $2,484. Momentum indicators are also giving us some positive vibes. The Relative Strength Index, RSI, is trending higher, and the Moving Average Convergence Divergence, MACD, flipped to a bullish crossover in early July, with rising green histogram bars. But here's the catch: if ETH corrects, it could extend the decline towards the key support level around $1,511. On the daily chart, ETH has been in a sideways trading pattern for the last 22 days, between the 50-day EMA at $1,857 and the 100-day EMA at $1,925. The 200-day EMA at $2,132 is overhead, reinforcing the broader corrective backdrop. The RSI around 54 hints at moderate, rather than impulsive, bullish momentum. The MACD indicator stays below zero, suggesting that upside attempts could face supply against the cluster of medium and long-term averages. So, what's the takeaway? Well, it's all about the calm before the storm. Ethereum's sideways trading might be a sign that the real action is about to unfold. Institutional demand, on-chain accumulation, and technical indicators all point to a potential bullish breakout. But remember, in the crypto world, nothing is set in stone. So, buckle up, and let's see where this journey takes us. What do you think, folks? Are you ready for the storm to hit, or are you waiting for the calm to pass? Let me know in the comments, and don't forget to like and subscribe for more crypto insights.